Alright, hi, my name is Dylan and welcome to my daily trading analysis video. So today's date is 25th of September, time now is 11:50 a.m. in the morning. 2 minutes to 11:50. So today I'm going to touch on a few currency pairs, mainly the New Zealand and the Australian dollar pair. And yes, so we're going to start off with the New Zealand against the yen. So I did mention about this pair yesterday, and what happened is that there is a rising trend channel, as you can see, the two parallel lines that are drawn over here. And the thing is that price is being supported at the bottom of the falling trend of the rising trend channel, and at the same time supported by the 200 moving averages, as you can see over here. So 200 moving averages has been proven to be quite a strong support and resistance level. Evidence can be shown here and here as well. And then the thing is that price unexpectedly plunges after a statement by the Reserve Bank of New Zealand, Garth Wheeler, saying again that price is unjustifiable and unsustainable, and we can expect a significant depreciation for the Kiwi, even further, or rather the New Zealand dollar. Alright, so what we are seeing here is that it is attempting to break below the rising trend channel, and that could significantly means that the sentiment might change into a bearish one. And if it really falls further, the next level we are looking at is the 86 is at 86.64. Alright, 86.64. So if it closes below, right, we look at 86.64, then we look at a possible trade to long. Alright, because end of the day, fundamentally the Kiwi is still should be rightfully stronger than the yen. Okay, and if look at the daily chart, right, this level is somewhere close to the 200 moving averages as well in the daily charts. So we might be able to expect some long opportunity over at this area. Alright, so that is all for the New Zealand yen. And looking back at New Zealand against the dollar, right, on the weekly chart. So again, 200 moving averages has been a strong support level. So I mentioned about this yesterday as well. You can see all the support level over here. And again, it fell because of the statement by Garth Wheeler itself. And look at the daily chart. Price seems to be making an attempt to close below the key support level of 0.8066, and that could potentially means that price might even fall further, especially if it closes below the 200 moving averages in the weekly charts. Right, so the thing is that we might have to wait for the end of this week to see if this candle closes below the 200 moving averages or not. And if it closes below, I will also want to look at this level, 0.798, somewhere 0.798 or 0.799. This level itself is another exhaustion level measured by Fibonacci expansion. So if it even close below this level, 0.7988, that could mean a potential reversal, a very strong reversal. I'm talking about even a monthly chart. It might just fall all the way. Well, because end of the day, the Kiwi is really overpriced based on history. But then the thing is that if it is able to get supported by this level, then I am expecting a strong rebound. As you can see, based on the weekly chart, between the price of 0.7988 and 0.8454, roughly there, you can see that there is always a range. Price always move within that range before it breaks higher or breaks lower. So we'll see about that itself. Next we have the Australia against the US dollar. So what happened here right now is that this is the weekly chart. Let me just remove these circles over here. Alright, this is a weekly chart. Zooming a little bit. Alright, the key level over here, the key support level at 0.8887 has been seen breaking below. Right, even as we look at the 4-hour chart, it has broken below, which means that it might depreciate even further. Alright, for the Australia itself, just repeat on the fundamental is that the RBA is definitely looking at a weaker currency for Australia dollar, because it has been a hinder to the RBA's efforts to boost the domestic growth. Alright, so technically itself right now it seems that price is definitely is most likely to fall even further. So we might want to wait for some retracement before we went for the short. Alright, it might just fell all the way to 0.8698, which is the previous low. Alright, previous low back in 2014 in January, which is beginning of this year. So yes, just wait for a retracement, try not to retrace it. And last but not least, we shall look at the Australia against the New Zealand. Alright, this is an interesting pair. So previously there was a rising trend channel, it broke above, but it fell again back into the channel again, and it almost got the price almost touches Fibonacci retracement level at 61.8%, but before that it started to rebound. As you can see that there is actually a support level over here, so price actually took this level, it rebound, and right now the next resistance level you can see is at 1.1045, which is the maybe just replot the Fibonacci retracement over here. Alright, this is H4 chart. Alright, close to the retracement level of 30.2%. Right, the thing is that on the fundamental level, if we look at the economy itself for Australia and New Zealand, we are seeing that the Australia economy might be a little bit weaker than the New Zealand, as New Zealand is just taking a pause from to have a period of assessment to when to raise interest rate, while Australia is still having a problem with domestic growth, even with their interest rate being kept at record low. Right, so rightfully we would like to look for shorts for the Australia against the New Zealand dollar, and based on technical itself, we might want to find a shorting opportunity between the price of 1.1045 and probably 1.1061, because that is the retracement level. Alright, let me just be a little bit more accurate. Yes, 1.1061 and 1.1045. So when it prices reaches this level, wait for a setup, and probably you can go for a short. Potentially the first level at the low at 1.092 or even further, which I will touch on it again. Alright, so that is pretty much for today, and thank you for watching. I will see you again.